Subscribe our channel and press the bell icon for watching more video.
The next topic is procuring non-stock material. So the first question that you might have is, what is a non-stock material? And of course, the follow-up question is, why is procuring stock material or non-stock material any different from one another? Let's explore that. In our coffee shop, we procure coffee beans. We also procure stirrers. Is procuring coffee beans any different from procuring stirrers? Well, purely from a logistics perspective, they're not different. Maybe they require separate storage conditions, separate packaging, but beyond that, purely from a logistics perspective, they're not different. The vendor loads them up in the truck. The truck is unloaded at our warehouse, and we go stock them in the respective storage locations. So what really is different? Well, for starters, coffee beans represent a significant value. 100 pounds of coffee beans, say $10 a pound, 100 pounds of coffee beans is $1,000. But 100 quantity or 1,000 quantity of stirrers is probably $10 or $20. So there's a lot of difference in the value. So purely in terms of stock keeping, it doesn't make any sense to count the stirrers. Oh, I got 1,200 stirrers. I got 222 stirrers. Does it make sense? No. It's just a waste of time and energy to count the value of stirrers or even the stock of stirrers. And before we go any further, since we are talking about a topic called valuation, let's take a quick detour and understand what really is valuation. You've seen the accounting tab of the Material Master that there's something called as valuation class. What is valuation class? And how does it affect the value of the material? And I said, for price control, select V. Typically for all materials that are procured, not manufactured. All materials that are procured have a price control of V. And what is V? V stands for moving average price, or MAP. You could call it weighted average, or it's all the same thing. It's averaged out every time we procure. We're going to talk about it. So why don't we do something? Let's create a material, set the moving average price to 0 by default, and then start issuing some POs and see the difference. Alright, so we're going to do MM01. Let's create a brand new material. Coffee beans, instead of 03, let's call it 06, so that we know that this is a different material and it's just starting off. Retail sector, and it's a raw material, right? So hit enter, and we are only interested in 3 views: basic data, purchasing data, accounting data. Hit OK. And for plant, as usual, we use the Chicago plant. And the coffee beans or bags, whatever. Pound. Material group is food. Hit enter. And purchasing group is US1. Hit enter. And finally, the valuation class is 3000. And price control is V. V for moving average. And if you look at the possible options there, you'll see 2 different values. S for standard price, V for moving average price. And like I said, for all materials that are procured externally, always use V. V for moving average. Alright, so we're done with that. We're going to hit save. It's going to issue a warning. Ignore that. Click OK. Alright, coffee beans 06 is created. And of course, if you go back to coffee beans, hit enter, and go to the accounting view, enter plant Chicago 1, you'll see that the total stock is 0, the moving average price is 0, and the total value is 0. So nothing has been procured, we don't have stock yet, and the average price or the moving average price is 0. So let's keep this screen right there and go open another screen and do a purchase order, ME21N. All right, doesn't matter which vendor, so just select some vendor, and of course the purchase order of US01, some purchase group, and company code US01. Select coffee beans, not 03 but 06, the material that we have just created, and we're going to do a quantity of 1, just 1. Of course, use a plant Chicago 1, enter, and we're going to put a price of $10, right, and hit save. Okay, a purchase order is created. Let's go quickly save. Control C. If you go back to the other window, you'll see that nothing has changed here. If you want to see the changes, this screen doesn't refresh automatically. So if you want to see the changes, you got to go back and then hit enter again. Go to accounting view, enter Chicago 1, hit enter. So that's how you refresh for changes. But over here, nothing has changed. Stock remains 0, value remains 0, moving average price remains 0. So that means, so irrespective of the number of purchase orders that you created, the value does not change. But when does the value change? Value changes during goods receipt. That's when we have received the goods, the physical inventory, and the stock goes up and a whole bunch of changes happen. Let's go do a goods receipt. What's the goods receipt? All right, the transaction for goods receipt is MyGo. So go to MyGo, enter your purchase order, Control V, and the storage location, raw material. Make sure you click item OK. So we're receiving a quantity of 1 at the price that we have seen in the purchase order, $10. Click save. So material document is created. That means we have completed the process of receiving the goods. Go back to the other screen, the material master screen. Start all over again. Accounting 1, Chicago 1. You see that? The moving average price or the moving price is changed to $10. And the total value is $10 and the total stock is $1. So as soon as you finish the goods receipt, SAP has automatically updated the material master. With what? With the price, the quantity, and the total value. The total value is really simple, right? Price multiplied by the total stock gives you the total value. So let's catch up with the slides. So what have we done here? We have created a material master for 06, set the price control to V, and of course, since we are creating this material for the first time, the moving average price is 0 and the total value is 0, total stock is 0, everything is 0. The first step that we have done is create a PO. And when you created the PO, after you saved it, you went back to the material master and nothing has changed. And after that, you have done the goods receipt. So when you have done the goods receipt, that's when the price has changed. The price changed, the stock changed, and the total value changed. The total value is basically a multiplication of this and this. So if you multiply both these fields, you get the total value, right? So if you do another purchase order at a price of $10 per kilo or pound, then effective average price is going to remain the same, right? So that scenario is simple. You can do it in your system and see the effect of it. The average price does not change, the quantity and value changes, obviously. But what if the price changes in the next purchase order? Again, let's do a purchase order. This time, let's do it for a quantity of 2. All right. And then We're going to do it for Chicago. Instead of a price of $10, let's do $20. Okay, and then hit save. Save your purchase order. Control C. Copy your purchase order. Go to MIGO and do a goods receipt against that purchase order. Do an item OK and click save. Let's go back to the material and see what happens. In the material master, go back and come again. Select the accounting view, click OK, select Chicago 1 plant, and what happens here? The stock has changed to 3, which is right. The first order was for a quantity of 1, the second order was for a quantity of 2. So 1 plus 2 equals 3. What's the total value? The total value is a multiplication of 16.67 multiplied by 3. So let's see if that is correct. Open a calculator and say 16.67 multiplied by 3. That's 50, right? The system seems to have calculated everything right. Now the question you might have is, how did it arrive at a price of 16.67, the moving average price? What's the formula used to arrive at that? The formula for calculating the moving average is this. The moving average price equals total value, meaning total existing value, plus GR value, the value of the goods that we have received, divided by the total stock at hand, plus the GR quantity, the new quantity that's being received. So when the first order was created, let me go back. So when the first order was created, the value was, everything was 0, right? So it was all 0, 0, 0. The quantity was 0. Value was 0. And the average price or moving average price was 0. Now, as soon as you have done the goods, this is when the PO was created. And then you have created a goods receipt. You have created a goods receipt at what price? Quantity of 1. And the value, we don't know. The moving average price or the average price was $10. So 10 multiplied by 1 will be $10, and that will be your valuation. And that was expected. So when you created the second order, right, the PO is created for quantity of 2, and the dollar price was $20. So the GR value, of course we didn't do a GR here, so that's that. And when we have done the GR, the quantity for which we have done the GR is 2. The dollar value is at $20 per pound. So the GR value is 20 into 2, $40. Right? Now, how did SAP calculate the moving average price? That's the question. So we said the moving average price equals current value. What's the current value? $10. Plus the new GR value. What's the new GR value? 40. Divided by current quantity. What's the current quantity? 1. What's the GR quantity? 2. So that is equals 10 plus 40 is 50 by 3. This should equal 16.67. So just go to the calculator and you'll find out that that's the correct value. Right? And now you can go on and on and on. Next time, for example, let me do one final example. Again, let's do a PO quantity of 3 at a dollar price of 30. And do you do a goods receipt? Of course, for quantity 3 at a dollar price of 30. So the dollar GR value, meaning what's the total value of goods that we have received, that would be equal to 30 into 3, $90. Now let's calculate the moving average price again. Now the moving average price is the current value. What's the current value? The current value is $50. Plus what's the new value? 90. Divided by the current quantity 3 plus what's the current quantity? 3. 50 plus 90 is 140 divided by 6. So 140 divided by 6 is 23.33. So that's the new moving average price, right? You can go see it in the system. It will not deviate from that value. All right. You want to test it? Let's go do it. ME21N. Same vendor 4001. And every time we have to enter this purchase org, purchase group, company code, right? It's a pain. So SAP has a provision to default your values to a certain set of values. The reason is real simple. If I have 10 coffee shops, 5 in the US, 5 in Canada, each coffee shop will have the respective people doing transactions, creating purchase orders, receiving goods, receiving invoices, paying invoices. And they'll be doing only for that respective shop or plant, assuming a shop represents a plant. So in that case, why should they go and change these values or enter these values again and again and again? The purchase org, purchase group, and purchase company code. Instead, for that user, the user sitting in Chicago plant, say, if we can default the values to the same values that he uses again and again and again, he doesn't have to enter these values every time he creates a PO. And how can he do that? Go to personal settings. Go to default values. And here for the purchase org, enter US01. And purchase group, enter 300. That's the one that we have been using, right? And for company code, also enter US01. And click save. Okay. Now go back. No. And come again. You see, they're all defaulted. I didn't enter them. Now if you enter the vendor, the other field, the purchase group field, will also be defaulted, right? So you don't have to enter these fields again and again and again. Now, how about the plant? Can we default the plant? Yes. Go to personal settings, go to default values, go to item, and for plant, enter Chicago 1 and click save. Again, go back. ME21N, enter your vendor and enter your material, say coffee beans 06, quantity of 3. You want to check the plant? See, Chicago, it's already entered, right? So that's how you default certain fields. Not all fields can be defaulted. Certain fields can be, and they are predetermined by SAP. So use that if you don't want to enter these fields again and again. So imagine a person sitting in Chicago plant. He's ordering for the Chicago plant only. So it doesn't make sense to always enter the plant for Chicago here. It's always Chicago for him. So for that user, it's always Chicago. And these are personal settings specific to a particular user, not for everybody. So if you log in with your user ID, these are not your default settings. Definitely not. So they'll not be defaulted until you go to personal settings and then set your defaults. All right. So that's that. Now what were we trying to do overall? We were trying to create a new purchase order and see the effect of the price. So what was the price that we wanted to try? The price that we wanted to try was $30 for a quantity of 3. So let's go put $30 here. And the quantity is 3 and click save. So go to the PO, save the PO, and quickly do a goods receipt. MyGo. Paste your purchase order, and we're gonna put it in the storage location of raw materials. Click item OK and click save. All right, let's go back to the material and see the price changes. Go back, enter again, go to accounting view, enter Chicago. Do you see that? 23.33. That's the moving average price. Want to check that? Here it is. So that's the formula to compute the moving average price. And this is how you set the defaults. Go to personal settings, and all settings in the header are in the header section, like purchase org, purchase group, company codes, and all settings in the item are in the PO item. So once you set that, go back and come again, and all your settings will be saved, and those values will be defaulted every time you create a purchase order. So I think we are done with our detour of moving average price and valuation. And let's go on to procure non-stock materials. What we're going to do is procure both stock materials and non-stock materials in the same order and see how they are different. So we have created a material, coffee beans 06, and to order stirrers, we have to create stirrers. Did we create stirrers? I'm not sure. Let's go check. Go to MM01, type in stirrers 01, and it's a raw material, but we want to create it as a non-stock material. So use nlag and hit OK. And as usual, select basic data 1, purchasing, accounting. Select Chicago 1, stirrers, whatever, basic unit of measure, each. It's not measured in pounds, right? Enter some material group, enter, and just save it. All right, now let's go to ME21N. Select 4001 and say coffee beans 06, 100 pounds. Right, and then stirrers, STIRRERS 01. Say, we are ordering 1000 stirrers. Oops, I see a red there. What's the problem? You see the warning at the bottom? Account assignment mandatory for stirrers. It didn't say that for coffee beans, right? The obvious reason is coffee beans are a different material type and stirrers are a different material type. So this one is a stock material and this one is a non-stock material. And how are they different? Based on the material type. This uses ROH for material type. This uses nlag for its material type. So go back to the material master if you have questions on the different material types, how they are different, and see more examples of different kinds of materials. Now, so SAP is not allowing us to go forward because it's not a warning, it's an error. So you can't save it. Well, you can save it technically, but you can't really do anything with it. So how do we fix this problem? Well, we got to do something like this. We got to put an account assignment of K. K means cost center. Hit enter. And then at the line item level, of course, put a price. And then at the line item level, go to account assignment tab and put a cost center here. If you put a K for cost center, if you go to the possible list of values, you'll see that K stands for cost center. So what's really happening here? Why is it that the coffee beans does not require a cost center, but stirrers need a cost center? Well, when coffee is ordered and goods are received, coffee stays in stock in the warehouse. So coffee is really stock. Let me go back here. So when you order coffee, coffee stays as stock in the warehouse because it's a stock material, raw material. And you know stirrers are raw material too, but you have created it as NLAG, non-stock material. That means the system does not track the stock. Well, there is still stock, but system does not track the stock and it's not treated as stock. When non-stock materials like stirrers or baking sheets are ordered, they don't stay as stock. They are deemed as consumed immediately. Now I know it's confusing, so just stay with me here. When coffee beans are received and put in stock, it's sitting there waiting to be consumed, right? So the principle is really simple. This is the principle of dual entry accounting. So for every transaction, there should be an equal and opposite amount of entries, equal credits, equal debits. Think of it like a seesaw. You put something here, you put something here, equal and opposite, it's balanced, right? On one hand, we have paid the vendor, say a value of $1,000. For what? 100 pounds of coffee. And we have 100 pounds of coffee sitting here. So it's balanced. So we have stock of 100 pounds and we have paid the vendor of $1,000. Now, how about non-stock materials? Let's say we have ordered $1,000 worth of stirrers, right? The same vendor, and we don't store them as stock. Say we get 10,000 stirrers. Where are they? Well, they are there in the warehouse. Nobody's going to eat them. But where are they? They are deemed as consumed. What does that mean? It's not in the stock, but it's still in the warehouse. That's totally confusing. Definitely. No, they are kept physically in the warehouse, but the system is not tracking the stock. So there are three things here. They are physically in the warehouse. And second point is SAP is not tracking it, not tracking the stock, not tracking the value. And we are saying the stock is deemed as consumed. So they're physically in the warehouse, the stock is deemed as consumed, but SAP is not tracking it. You got to understand these three things really to understand what non-stock materials are. So logistically speaking, like I said, there's no difference between coffee beans and stirrers in terms of procurement. They're there in the warehouse like any other stock. But SAP is not tracking the stock because we have created that material as a non-stock material. All right. Now, when SAP is not tracking it, that means that it is off the books. And when something goes off the books, it has to be either consumed or damaged. When I mean consumed, there are many possibilities. A shop that requires coffee stirrers could consume it. Or the coffee stirrers could be burned and they're gone. They're off the books now. So when they're consumed, somebody's bearing the cost of it. That's the bottom line. How can somebody bear a cost for a material? Somebody in the company? That's done using what is called as a cost center. Now, there are other ways of consuming. For example, a customer could consume some stock, and that's called consumption via sales order. A production order, meaning an order to manufacture cakes, could consume raw material. So that's called consumption against a production order. Right? There are different ways in which stock can be consumed, and the simplest way is consumption against a cost center or a department. The word cost center, don't let that word scare you. A cost center is a technical word for a department. So what departments does my coffee shop have? I have a marketing department taking care of flyers and advertising my coffee shop. I have a production department making cakes, pastries, and all the good stuff. I have my HR department taking care of employees, salaries, promotions, etc., etc. I have a finance department taking care of accounting. Right? Each department will incur some costs. The HR department might need paper for printing. So paper is a cost that the HR department is incurring, and paper needs to be procured. So all orders of papers that are coming in will be charged against the HR department if that's the only department that uses it. Why are we not putting in stock and charging directly to the HR department? That's a good question. We'll get to that in a minute. So for now, let's create this cost center. And creating a cost center is creating a code for a department. As simple as that. Okay? Now, how to create a cost center? The transaction for that is the transaction to create a cost center is KS01. And the controlling area is 2000. That's what we have been already using. And we're going to create a cost center for HR. HR01. And this is valid from today. Give it a name, HR department, or a description, doesn't matter. Person responsible, say I'm responsible. And the cost center category, say administration, because it's all HR, right? Administration. And the hierarchy code, again, you can always go and select from the possible list. Say finance and administration. Company code, of course, is US01. And the currency is USD. That will be derived automatically. And save. Oops. Okay. So it says the company code is not created. Let's fix this problem real quick. Go to enterprise structure, assignment, controlling, assign company code to controlling area, select 2000, click on new entries, enter US01. Don't worry about this step. It's not important for us. Right? And I've done some magic behind the scenes. So let's go back and try this again. KS01, HR01, put a name of HR department. The person responsible is Siva. And the business area is something. Hit enter. Save it. Now let's go try to order those stirrers again. 4001. And order coffee beans for the first item and stirrers for the second item. It says account assignment mandatory, and we have said in the A column or the account assignment column, put a value of K. Hit enter. Put a price. The price could be $10, $20, whatever. And in the account assignment, we're going to say HR01. So what we are essentially saying is the cost of one quantity of stirrers, whatever the price is, the cost of stirrers is to be consumed by the HR department. And don't worry about this error, we're going to fix this. But try to understand this concept. The cost of stirrers is consumed by this department. So when something is consumed, it's no longer in stock. Done. It's consumed already. That's the reason why SAP does not really track stock, because it's consumed, it's done. You can physically keep it in the warehouse because you don't want to keep your stirrers right by your desk, right? You could keep it in the warehouse, but purely from a consumption perspective, they are consumed, done. They are no longer tracked as stock. So the vendor has been paid and some department has consumed it, and that's how it will be accounted, right? Now let's go fix this problem. Version 0 is not defined for fiscal year 2016. And the way to fix that problem is go open a new window, go to OKEV. This is all controlling, so you don't have to really understand it. Somebody else will fix these things for you. So since there is no finance consultant, we are doing it all on our own. Enter controlling area 2000, click OK. And it says I've locked the cost center. All right. So we saved that, go back, and come here. I'm gonna say no, and try OKEV again. Hit enter. And go to version 0 and settings for each fiscal year, right? And here enter or copy 2009 into 2016. That's the current fiscal year, and save it. Doesn't matter any transport, and we're done. Let's see if this gets refreshed. Click enter, save. Document still faulty. No, we want to edit it. Purchase order, blah blah blah. Looks like that's not refreshed. So let's go back and come again. Do you need to save the document? No. So ME21N. Put your vendor of 4000. And everything else is taken care of for you. Just start entering the materials. So coffee beans, the first item, and stirrers, the second item. It says account assignment mandatory. We know what to do. Enter K here, and then enter a price here, and then enter HR as the department that's going to consume the cost of that material. That's it. Now you can save that transaction, right? All right, what have we seen here? Creation of cost center, transaction K01, and we have entered some details, doesn't matter what details, and we have entered K is the account assignment for stirrers, and under account assignment we have entered admin, HR, whatever as the cost center that we have created. So the cost of this material, whatever the quantity is being absorbed or consumed by this cost center, and that's achieved through account assignment. So account assignment is a modifier that modify. So account assignment is really a modifier to the way accounting is done. And like I said, the logistics does not change. You go to same MIGO, receive both the materials. You go to same MIRO, pay for both the materials. Pure, nothing really changes from a logistics perspective. The only change is from an accounting and consumption perspective. And A, the account assignment column is used to effect that modification. In this case, we are consuming against a cost center. There are other ways to consume it, which we'll see in the next set of chapters. So we can create more cost centers. Marketing could be another cost center. So create a material called flyer and then consume it against a cost center of marketing, right? So if the marketing department needs flyers, they'll be consumed against the marketing department cost center. So anybody creating a purchase order for this material should have to enter K here and then enter the cost center here. Done. Now, how about shared services or shared goods or services? Well, we're going to talk about services in the next chapter. But for now, how about shared goods? Think about anything that's shared between different departments. How about paper? Let's say the HR department needs printing paper, the finance department needs printing paper, the marketing departments need printing paper. So it doesn't make sense to order printing paper for each department, right? Order them in bulk. It's more cost efficient. And when you order them in bulk, say 100 packs of paper, how do you distribute the costs? The HR department, let's say, uses costs more and marketing departments use like less, say 80-20, right? So there should be an easy way to distribute the costs. Say the marketing department needs 80% and admin department needs 20%. If you go to the account assignment and if you go to the distribution field, there's something called distribute by percentage. And you can put the different cost centers there, put a percentage. The cost incurred for the procuring the corresponding material will be shared correspondingly between the respective departments. So we have created one cost center, right? HR. Now let's create another cost center, admin. What's the transaction? KS01. And instead of HR, put in admin 01 and the reference cost center is HR01. Why do we put a reference? So that everything else is copied for us. So admin is created. And if you want to create finance, enter, save. Right. Now let's go create a purchase order for something like paper, doesn't matter, whatever non-stock material. In this case, I'm going to say stirrers. See, we are procuring 1000 stirrers and put a account assignment of K. And what's the cost for it? The cost is $10,000 at $10 per piece. Well, that's an exaggerated amount. Let's put $1 per piece. So $1,000. So 1000 quantity is $1,000, right? So $1,000 needs to be distributed across, say 80% goes to distribution by percentage, and say hit enter. HR01. Go click on this tab and you should get that table. So percentage wise, we said 80% goes to HR, right? And then 20% goes to admin. And then 20% goes to admin. we are going to divide it based on percentage and select distribution based on percentage and say 80% goes to HR and 20% goes to admin, right? You see the costs are being shared, the quantity is being shared. Click save. So the accounting is automatically done for you. This is how you share costs for a common material that's procured in bulk.